Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Friday, February 28th as I record this during the pre-market. And here we can see we are looking at the UVIX, which is the 2x long VIX futures ETF, which closed yesterday at a price of $32.78, being up over 11% on the day and continuing up a little bit more in the pre-market. And we can see over here what it looks like is we got the highest close that we have seen since it looks like the last date we closed higher was on January 14th, I believe. So, looking pretty good there, although we have been higher. So on February 25th, we hit a high of 33.75, marking the top of this green box. And so, yeah, it'll be interesting to see if we do get higher, kind of like I have depicted in this little doodle of an arrow, with us coming down to effectively test the 21-day moving average here, which is currently around $29. Did open yesterday at $28.90, so right at that moving average, then getting above 30 and closing at that high. So yeah, looking at this, I'm kind of wondering when we will be seeing a top and when we will be seeing a pullback. I still think that this will eventually be coming down to around $26 a share, if not lower, perhaps, to test the downside of this parallel channel that we have been trading in since we entered it on August 9th, following this massive move to the upside. And so I think it is kind of a stretch to be expecting a move like that. But, one thing that might be suggesting we could be getting a big move like that is the 200-day moving average is slowly moving lower, currently at 47.88. And it does seem like it may eventually be coinciding with the top side of that channel. And so if we are able to get up there, actually, I think that'd be just a really notable resistance. So yeah, I think that just getting to the top side of that channel, just getting up to around $40 a share, I think that would be a really good move. And I suspect that we will be seeing a pullback in the next week or so. So that is what I am prepared for. And then if I do switch over to the 10-minute time frame, we can see that, the low from a couple days ago is 28.07, and we've really just been trading around that orange line at $30 a share. And now it looks like we're at the top of that green box. So we will have to see, where we close the end of the week. And I actually think that that's going to be a pretty important level. Wherever we close at, if we're closing up pretty high, that could suggest that, maybe we see a gap up into Monday of next week, or perhaps it could be a fake out. You never really do know. So good to be cautious about that and thinking about, the possibility of a gap, whether that's to the upside or the downside over the weekend, is to be considering the VIX. This is the market volatility index, which did close above 20 yesterday, closing at a price of $21.13, being up over 10.5% on the day. We got this nice big green candle here, but we haven't gotten above this high that we put in a couple days ago. So on Tuesday the 25th, we did get up to a high of $21.48. We got close to it yesterday, hitting a high of $21.47, so being just 1 penny lower than that, but putting in a lower close. Also, this is the first time that we have closed above this uptrend in quite a while. And so we'll have to see if we do get a follow through, if we still do close above that level, or if we start to break down. And so I do have this alert set here at when the price does go above $20 a share, kind of signifying the possibility of a big move like this, as we did. Let's see, I'm just going to zoom in here so we can kind of look at this. So I got that alert there at 20. And so here, this was August 2nd. We closed that weekend, or that Friday, I should say, at a price of 23.39, only to gap up on Monday pretty massively. So if we are to be closing above 20 on this Friday, that could suggest we might be seeing a pretty big spike in volatility, perhaps getting up to 28 or so. That was the high that we hit on December 18th, but maybe we could be going even higher, like when we hit 65 over here. So, that is quite the possibility, but we could also be heading to the downside with, let's see, this alert here in this prior gap that was filled at $14.85. So if we're closing above 20 today, I would expect some volatility to be increasing over the weekend. Perhaps that's a signal. But if we close below 20, I think that would be suggesting that we are respecting this level as resistance. It is pushing us back down, and we will have to wait to see that breakout to the upside. So do keep that in mind. All right, and then I should just flip over to the 10-minute time frame just to get an idea what's going on there. Yes, still do have this $21.48 high here from the 25th, pulled back a little bit before getting up to right around that level. And so I'm actually just wondering, looking at it like this, it's a little bit out of picture. So maybe I want to do 30-minute time frame. So I'm kind of wondering, is this, I was thinking just, maybe this is a cup and handle, but, maybe we got like a little bit of an inverse head and shoulders here. So that could be suggesting some volatility to the upside. And then thinking about that, I'm going to look back over at the VIX to see, actually probably flipping over to the 1 hour time frame, and I might remove my drawings for just a minute. But yeah, just looking at this possibility of an inverse head and shoulders pattern, how do we see the volume corresponding with that? And since we do have the pre-market and whatnot on there, I might actually just switch over to the daily. And so looking at this, pretty like micro scale, but what we see is volume, did increase here when we're near the bottom, so pushing up there. So yeah, I find that to be kind of tough to project where this might be going, but just thinking about this, this is something. It's a little bit spicy. So if I do just connect this downtrend here, what does that look like we did? What does that look like we just did? So coming back to those highs over there, but just thinking about how, we got rejected from these levels here, but what did we just do? We just broke out. So, yeah, I wonder if the UVIX actually could be going up to maybe $40 a share, gapping up over Monday. And if we do something similar with the VIX over here, just coming back to like the open from December 20th, look at that. So I do think that we could be seeing a pretty big move to the upside. So if we are closing today above 20, it might be a good idea. I'm just kind of taking a mental note for myself. If we close above 20 on the VIX, it might be a good idea to maybe grab a very small position, maybe 1 or 2 shares of the UVIX to see if it does go up higher. If we do see a big move in volatility, could be a very nice way to hedge over the weekend. But if that doesn't happen, good to have that as a small position, because if we do get a rejection, if we actually do not get a gap up over the weekend, small position, so one could be adding down here. So anyways, that's just, mental note for me, something to keep in mind. But anyways, let's flip over now to the SPY. This is the S&P 500 tracking ETF, which closed on Thursday at a price of $585, 5 cents, being down about over 1.5% on the day, but bouncing a little bit in the pre-market. And so, I might actually just remove, remove those doodles, because we haven't really gone either of those pathways, but it does look like we are pulling back to this downtrending level of support. So, I think that could be acting as support again. It was support, actually resistance, I should say, over here following the high from December 6th, getting rejected from that level multiple times, and then that getting flipped over here into support. Will it be acting as support again? I kind of suspect so. And just like I'm talking about with the VIX, the UVIX, maybe we get a gap up over the weekend. This is, making me feel like, I've got a little bit of confidence with this acting as support. But another thing that we can do is adjust these fib levels to include the 786, which is right around where we're at. So I think it might actually be kind of a foolish idea to be expecting a gap up in volatility over the weekend if we are holding 583. So what I might do for myself is just create an alert for 580, and to see if we do dip below that, I'm just going to keep a little bit closer of an eye on this. Actually, maybe I want to move it up there, move it up to I'll just do 583. So there is the possibility of us wicking below that 786, but not much lower than it. And then just to kind of evaluate, do we hold that downtrend as support? Do we hold, the 786 as support? And if not, then maybe we could be pulling down to this parallel channel that I have drawn here, which could be bringing price to a full retracement, coming down to around 575. So actually, 580 might be a level where we do come down to here. It looks like that cursor is right around 578. So good to be planning for a little bit more downside. But, a really cool thing about this is we can do this Fibonacci extension coming down to here and then going up to the high. So I'm going to actually make that line a little bit thicker and make that a green line. That would suggest that 576, 575, that could be a really nice dip buying level. And if you're wondering, how I get that 100% extension, that is effectively just the move here, but then translated over to the high from there. Then you get that exact same distance. That is the 100% extension. And so, we'll have to see, do we hold 583? Does the VIX close below 20? And if both of those things remain true, I think that the bottom could be in for this. But if we close below 583 here, close above 20 on the VIX, I think that we could be seeing further downside. And from where we're currently at, that would represent about a 1.5% move to the downside. So do be prepared for that. But if we do flip over to the 10-minute time frame, we can see how this is trading the past few days, including the after hours and pre-market. And it does look like we hit a low just yesterday, right before close, of $584.65, bouncing a little bit from there, and we actually gapped up from that after hours pricing into the pre-market. So we'll have to see if that holds. So really, I'm just going to be keeping an eye on $583 and see if we do hold that. But then flipping over to the SPX, do have to redraw a few levels here, like those retracements. And this did close here. This is the S&P 500 index, closed yesterday at a price of $5,861.57, being down just below 1.5% on the day. And so if I do adjust this Fibonacci retracement to, exclude those 50 and 61% retracements and add that 786, it also does look like this corresponds with this prior low that we hit following, this move up here, kind of getting rejected from this yellow uptrend over here. Might just make that a little bit thicker. And we did pull back to what looks like when we kind of really started to form that downtrending parallel channel, hit a low over here on November 6th. That was, the opening or low from that day. We did pull back to it over here, but that level is marked at $5,864.89, so right around 5,865. And that did act as, kind of a nice dip buying level, although we got some fake outs. I'm wondering, fake out breakdowns, I should say. I'm wondering if we'll see another fake out breakdown, and or if we will see, as I have illustrated here, coming down to this convergence zone of those levels. That would be around $5,770, $5,800, and looking at this over here, we do have that Fibonacci extension, so I could draw that over here as well. So just going from the high here of, let's see, right around that level there, coming down to here, and then up to here. If I just make that a little bit thinner and a little bit greener, we actually can't really see it because it, overlaps pretty perfectly with the level that I have drawn here. That is the 786 at around $5,853. Actually, wait, sorry, I'm an idiot. That's the wrong level. I wanted to be looking at the full retracement here. We can see that down here at $5,773.31 if you want to be super precise with that, but really just around 5,770. Got a lot of levels there, so yeah, I feel like we could be seeing definitely a move down over the weekend, which would correspond with a spike up, maybe a gap up in the VIX. And personally, I should note that I am no longer holding any UVIX, so that is something that, maybe something I do want to consider if we do get, because even from like the top of this box, if we do get a move up to, let's see, that purple downtrend that I have drawn there is just kind of a little bit of a doodle, but that does correspond with that 4070 level, which was a previous gap that has since very clearly been filled. And so if we do get a move up to there from the top of that box, that would represent another 20% move. So, maybe there's something to consider there with that. But since I do have to get headed to work soon, I am going to switch over now to Bitcoin. Does look like, and man, I wanted to spend some time on this. Bitcoin now right around 80,000. Does look like it hit a low of 78,000. And so I have to say that I did have some limit orders filled yesterday. I was thinking that like 83 might be acting as support since we did wick down to there, maybe get a bounce. That was blown through, as well as 80 and then 79. Thinking about that as this 50% retracement level. So the next two levels to the downside are going to be right around $72,000. So I might actually adjust this alert here to be below 72,000. And then the next level below there is, wow, that's getting into this box. So from here where we're at now, I think, let's see, yeah, 72. And then, of course, we have to have the fun level of, let's see, add another alert of, you can probably guess what number this is going to be, 69,123. And so for me, that would be like, all right, put things on hold. I think that's, an opportunity of a lifetime at this point to be picking up more shares around there. It's also just a fun number. So I would then be thinking that is a time to really go more aggressive. And again, I have to stress this. I cannot stress this enough. Bitcoin, for me, my mindset with it is this is retirement fund. But, if it did come down to 69,000, I might go so heavy or heavier to think that, maybe by the end of the year, I might actually trim a little of the position just to kind of, because I went so much more aggressively down in the 60s. And yeah, so we're just going to have to see if we are getting a bounce. At this point, I think like a reclaim of 86. So I did just remove an alert, but I might want to do an alert for going above 86,000 because I think that will be, an important level for us to reclaim, kind of like getting a bounce up here. And so I'm not going to doodle where I think it might be going. I clearly have been wrong in the past with that. But yeah, I mean, we just got these fib levels that we need to be paying attention to. And I'm actually wondering if we might be hanging out around 80,000, just like we hung out around here. Maybe that's where we put in a bottom, unless we start to get a, V-shaped recovery. And so, yeah, I mean, I guess I will do a couple doodles here real quick. If we are to get a V-shaped recovery, I could see something like this. And, yep, something like that. Really just a doodle there, so take it with a grain of salt. Or, if we start to break down, maybe we see something like that. And this, I think, would be that really nice dip buying opportunity. Of course, those are just doodles, but I will correspond them according to whether they are bullish or bearish scenarios there. So, yeah. I am excited. I think it's good to be having this mindset of being excited about the possibility of this dipping into the 70s, or I should say well into the 70s, since we have done that already, dipping into the 70s. But yeah, getting to around 72, 69, and maybe I should also note this region over here, 74. And so actually 75, that might be another level to be considering. And so, yeah, I've just got so many levels here. It's just like I just want to take full advantage if it is going lower, just to be a little bit more aggressive. So I'm just going to have that marked as a below level. And so the reason why I have that at 75 rather than 74, which I believe was the high over here, it was around 73, 8, 26, 19. And so, just because maybe we don't get to 74 because everybody's looking at that just rounding up from 73, 826.19, which is going to be an approximate high there depending on the exchange that you look at. But I mean, that did act as resistance over here, so a pretty important level. But yeah, I mean, if we don't get down to that and everybody's expecting it to happen, maybe we just hit 75. And so, yeah, I think like 75, 72, and 69 are the dip levels that I will be looking to get a little more aggressive with. But if we don't hit them, I'll be happy with that too. No worries. But now switching over to uranium, this is the ticker symbol URA, which is the Global X Uranium ETF. We did get a pretty nasty bearish engulfing candle there, closing the day yesterday, Thursday the 27th, at a price of $24.72, coming down nearly 4% on the day, hitting a low of 24.69. And actually, I think that was the low. Oh, the low over here was 24.66. But yeah, really pulling down to the levels that I've been talking about, right around 24.50. And so we, are basically doing this purple line, this purple arrow that I had initially drawn. It's just taken a little bit longer than I had expected. And so while there might be a lot of panic in the market, we might be a little bit anxious about this going lower. We do have this uptrending level based on, let's see, the low from August 5th. That's a date that I'll never forget when we gap down in the markets. And then also looking at the close from September 6th. And yeah, that does coincide with basically where we're trading at right now, as well as the 786 from this Fibonacci retracement here at 24.51. So yeah, I mean, I think that this is kind of like dip buying opportunities for uranium stocks. And with that being said, I have to say that I'm pretty proud of myself for being disciplined, not chasing the move up yesterday. I was a little bit concerned that, this might be going up to, $45 a share or so. And by the way, I'm talking about Oklo, which is ticker symbol OKLO, which closed yesterday at a price of $32.39, being down almost 7% on the day and continuing lower below $32 a share in the pre-market, putting in this bearish engulfing candle. And so looking at this one, I was disciplined. I had some dip buy levels at, I believe, 33.15, right around that 33.15, right around that 618 at 33.18. I think I was thinking different than what I was saying, and I thought I said what I was thinking, but I was actually saying what I intended. Kind of funny there how the brain works. And then I also had another dip buy level, I think at 32.07. Not really sure why I picked that level Let's see, that was probably because that was the close on February 25th. Now trading below all of that, but still above this low of 29.82. So we'll have to see if we do respect that level. And I think that's kind of, an important level. If we do break below this, we could be coming down notably further. And I would suggest the level that we do come down to would be right around $26 a share, being the 786 at 26.13, and that also corresponds with the highs from over here. So let's see, just going off of the open price from October 30th, which was at a price of 26.40. Got that marked there. And let's see, I'm going to make that a green line because I would view that as being, the next dip buying level, potential support coming down to 786, and these prior highs, this prior resistance will be flipped into support. And I think that at that time, a lot of people will probably be eyeing this 200-day moving average around 17. But, I don't think that that will be happening. And also, another level, I got to get headed to work. But let's see, just kind of a casual trend line, just connecting it with the lows over there. Yeah, I mean, that's just a beautiful confluence of levels. See, just taking it from approximately the low. And actually, maybe I don't want to do this so approximate. Sorry, I love getting this stuff super precise. So from the low over here of 535 and then connecting with, I'm going to do, let's see, the low over there. So that's 535, and then here that's 1714. So that does look like it is lined up pretty light. Going to make it light blue because I just love that soothing shade of blue. And yeah, confluence of levels there right around 26. That is what I will be looking for. And if we do look at the 10-minute time frame just to see this kind of breakdown that we are seeing now, but we are still above that level of 29.82. If we do break below that, if we do close below that, I would look for that next dip buying level to be maybe right around 26.25, maybe a little bit above those levels in case we don't pierce them. But 26 does seem like a nice level to me. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more pre-market prep and videos coverage like this. Thanks a lot for watching. Have a great Friday and a great weekend. Take care, you guys.